Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today, we're going to do something just a little bit different. We're going to evaluate the January price blues of cryptocurrency. And we're just going to look at Bitcoin for the most part because it's been around the longest and we have a bit more data on Bitcoin than we do for some other coins. And then we're going to go into a few news articles that I thought were pretty important for the day. But first and foremost, we're looking at the buy market percentage page, and we are going up again. This is a few days behind. This was only from the 17th. It doesn't record on the weekends, I don't believe, so it will be behind a little bit. So if the market has gone up, we won't see it till either later today or maybe tomorrow when it updates, and it could be all the way up here and starting to go on its way to breaching that 50% when average prices will start to increase. But the January price blues, I guess I'd like to call it. I probably didn't make that up, but I'm gonna say that I did. Either way, prices of cryptocurrency typically drop in January, so it's a really good time to pick up extra crypto. And they're usually highest about mid-December or so. Not always the case. There is some situations every year where it's just a little bit different. So it's not always the same every single year. So the prices aren't the highest on December 15th every single year. It does vary by a little bit. But that's what I want to talk about here. So this, I have several of the same chart for Bitcoin up, except just pinpointed on different dates. So this is from 2013 to the 2014 right here, just about a month. And as you can see, at this lowest point was actually on December 18th at about $570. It was maybe a little bit lower a little bit before that, but we're just looking at about December to January, maybe beginning of February-ish prices. And as you can see, it raised up, and in January, it started to dip a little bit. And in this case, it wasn't actually the lowest again until February 24th or 25th. So this one is kind of an unusual one. And, you know, the 2013, 2014 was a bit weird for Bitcoin, as it was about that time when Mt. Gox was under attack, and there was a lot of hacking going on. I don't think people really grasped how to store their Bitcoin properly and how exchanges could store their Bitcoin properly. There was a lot of issues going on with crypto around this particular time. So this one is a bit of an oddity, but it starts to get a little bit curious as you go up in the year. So this is the transition of 2014 to 2015, and as you can see, the highest price in this point was $433. However, if you had sold somewhere in December, it wouldn't have been so bad, at about $350. And then you can see mid-January here, it got all the way down to $186. So you could have definitely doubled your Bitcoin by just simply selling in December and really taking that gamble and just waiting. And you would have had to wait a while because, you know, you would have started to get a little bit greedy, and you might have wanted to buy at 311. You might have wanted to buy at 272. But if in reality, if you waited for the bottom and then bought, you would have gotten a really good deal on crypto. Now, I know that's a lot easier said than done, because as you're looking at the markets, you're seeing it in real time. And you can't see the future, so you can't see what price would be the bottom. So, you know, a strategy with that is just to, okay, you've seen the bottom at January 14th. You might think to yourself, well, is this the bottom or not? Because you don't know that at the time. And you can wait for it to go up 20, 30, 50 bucks, whatever your preference is, and then buy in. So really, you need to start seeing the trend first and then buy, rather than just assuming that it's at the bottom or assuming it's at the top. What you do is instead of just getting the maximum deal at the bottom or the top, you end up waiting for that trend to start dipping down. You realize the trend is going down, then you sell. So yeah, sure, you missed a little bit at the top there, but it's better than selling at the wrong time. Same thing with the bottom. So you see the bottom, it's way down there. You might think to yourself, well, this is a really good time to buy. And if it is, and if you feel that way, go ahead and do it. But you can also wait for that trend to start reversing and going up. Then you can buy in, because you're kind of sure at that point that that was the bottom. It's just not always the case, but as you can see, January is usually the lowest time, and it's usually about mid-January, and oftentimes, you know, closer to February. That's for a lot of reasons. You'll start to see a sell-off in December, and that's just to sell everybody's crypto. Everybody's selling their crypto for Christmas gifts and things like that, you know, for the holidays, whatever. And then in January, what happens is people, usually the Asiatic regions, are selling for preparation of Chinese New Year, which doesn't occur till a little bit later. And so that's kind of the reason why a lot of people think that the prices are so low in January is that Asia is selling off their crypto for the Chinese New Year. So that's 2014 to 2015. So let's take a look at 2015 to 2016. And as you can see here, once again, about mid-January, we've seen the lowest prices. And just about December 21st or so, we've seen the highest prices. So the highest price actually occurred about December 15th, maybe December 19th there. And then everybody started to sell off. And so if you sold any time in this region here, sure, you might have missed 20, 30, 40 bucks, depending on what day you sold. And then if you just waited just about a month in January, you could have picked it up at its lowest point, somewhere around 387 here. And if you were really, really lucky, 362. So there's that. So now let's take a look at the transition of 2016, 2017. And as you can see, the highest point was interestingly in January this time. So this one was a bit of an oddball here. So if you had sold in December, even if you had sold around Christmas time, you could have still picked it up for a little bit cheaper, but you would have missed out this year. So if you were to see this trend climbing super fast like this, you would realize that it's going to dump sooner or later, because that kind of rise is always met with an equal or greater fall thereafter, because everybody's getting a little bit more nervous, the price is going up, and they're like, when should I sell, and then everybody starts selling. Once they see all those sell orders start stacking up, everybody gets in line. The market is sort of like monkey see, monkey do. I think everybody thinks that they're thinking something different than everybody else, right? They're like, oh, I'm going to sell now, or I'm going to buy now. But everybody's thinking the same thing. So when they see other people buying in, they buy in. Whenever they see other people selling in, they sell. And sometimes that's the way to do things. Sometimes that's not the way to do things. But in this case, it was January 5th. And then on January, just about 6 days later, it was at about a $400 discount. Now, in today's prices, that doesn't seem like much. $400 is really, honestly, nothing in Bitcoin today, because we can see that in an hour. We can see that 2-3 times a day it moves at $400. This is nothing surprising in today's market. However, when you have something that's only valued at nearly $1,200 and it goes to all the way in the $700, that is a dramatic difference, and nearly half of its value was lost, maybe more like 35-40% or so. But that's pretty incredible. If you had sold all the way up here and then picked it back up here, you would have nearly doubled your Bitcoin, certainly quite a bit. So now let's look at the current chart. And this is the transition of 2017 and 2018. This is what we saw. The highest prices occurred at December 17th, December 18th-ish, around there at about 19,000. And as you can see, once it hit January, really started to dip hard. So selling all the way up here, anytime up here in these teens, high teens, and then picking it back up. And in this case, it wasn't till about February 6th or 5th until it was at its lowest price of about 6,200. So what does this tell us? This tells us that the approximate high of crypto, or at least in this region here, is approximately sometime in December, early January, and then the lowest price is usually mid-January to about February. Now, we may have seen higher prices at some point during the year, but here's the difference, is that it's so close between the high and ultimate low. Whether or not it was higher, earlier in the year, it doesn't really matter if you had been selling and doing what you should have been doing the whole year. But in December, if you plan to sell, try to find that high point, try to find where it's, it's going hyperbolic and just shooting way up there, and then sell it. And then what you need to do is wait about a month, maybe month and a half, it depends, and try and find that bottom. So the difference is that the high and the low is so close to each other, within a month of each other. And this is a great way to nearly double your Bitcoin. So just taking a look at this, if you had sold somewhere at 19,000, even 18, 17,000, not a big deal. You might think, well, I missed 2,000 there. But in the long run, as you can see on this graph, not a big deal in that case. So at 20,000, nearly 20,000, picking it back up at 6,200 or 6,500, you could have tripled your Bitcoin. And now it's actually only at, 84.42. So it hasn't risen that much. However, if you had previously sold it, at like 12,000 or something, that would have been pretty great. But I don't think a lot of people really knew that exactly was the top at the time, because everybody, I think, assumed that the Bitcoin was going to just rebound back like it always does. But in this case, it just wasn't the case. So this is actually the most unusual dip, and probably the longest in terms of raw numeric value, the biggest dip, and one of the longest so far. I did show you guys that horrific Bitcoin crashes picture on my channel numerous times, where it shows how many dips Bitcoin has happened, how many crashes, if you will, and recovered from it every time. The one was over 400 days was the longest, and then there was other ones that statistically, percentage-wise, were the largest dips, from about 1,000 to like a couple $100. That was statistically the biggest dip. However, numerically speaking, this was definitely the biggest dip, from nearly 20,000 to 6,200. So I hope that showed you guys a little bit of insight into the market. Of course, there's going to be dips and rises throughout the year, but what this shows you is that you should prepare in December to, and now I don't want to really tell you guys what to do, obviously, because it'll, obviously it's your money, you do what you want with it, but a good idea would be to, just to think about selling some or all of your crypto, depending on, your situation, sometime in the December high. Whether or not it's the highest point of the year is sort of irrelevant, because that about a month later it's going to be much less, and oftentimes it's significantly less, and we're talking 50% or more less the next month, or month and a half, maybe month and a week or so, until you get to the lowest price of the year. So January is almost always the lowest price, so that means you know that you can sell at some point during December. So this was 2014 to 2015. As you can see, the highest point was clearly in November at 452. However, even selling in December, early December here, or even close to Christmas, or even at the lowest point in December at 313, and then just waiting a month at 185, you just doubled your Bitcoin. So yeah, that was a long time ago, but it just goes to show that there's always this massive dip at some point in January, or at least close to February in the last case. But a few news articles. Former OKX chief joins rival cryptocurrency exchange Huobi. So the former CEO of Hong Kong-based crypto exchange OKX has announced he is joining the rival platform Huobi as its vice president of global business development. So OKX was in a lot of trouble, and the CEO disbanded, left, and now he's joining Huobi. So that's kind of weird. So I'm a big believer in blockchain technology. View exchange is the heart of the industry, Lee said in an announcement. The new appointment comes just a week after Lee announced his resignation from OKX, a departure that came after just months as the platform's CEO. So according to his announcement, Lee had been OKX's parent from OKCoin since 2015. He was appointed CEO of OKX after its predecessor, Star Zhu, stepped down from the role in February. So in a public note on WeChat, Lee suggests OKCoin has experienced a notable turnover rate of senior executives in the past years. It sure has. So don't use OKX. They were the ones that did the rollback of futures on apparently March 30th, according to the article here. So as in following what it called an irregular sell-off, and it triggered forced liquidation account by manipulating the prices. So a lot of people thought that they were manipulating prices. They say, no, we were not manipulating prices. Of course they're going to say that. Not that I'm saying that they did or did not, but of course they're going to say that they didn't. So that's not particularly surprising. So this caused a lot of people to lose a lot of money on OKX. Another thing is that someone came into their offices with poison and threatened to kill themselves with poison unless they got their money back or their coin back. I'm not sure what his particular demands was, but you know, apparently it was somebody in distress. So OKX has had a history of drama. So here's another thing I want to talk about now. I'm not a big fan of Roger Ver. And Mate Tokay from Bitcoin.com joined a new fintech startup advisory board. Everybody knows that I'm not a big fan of Roger Ver. But the last time that Roger Ver... the last time that Roger Ver backed a token was Nagacoin, and I noticed during that ICO, it was the first ICO that I promoted, and I never had any referral links, so I never made anything from it, to be totally honest. But the first ICO that I promoted was Nagacoin. The reason why I promoted Nagacoin was because looking at the list of advisors and developers, on that list was Roger Ver and various other notable individuals. So you might think to yourself, well, why would you do that if it's Roger Ver and you don't like Roger Ver? Well, just because you don't like somebody doesn't mean that they're not going to make a lot of money. It's kind of like Warren Buffett and those guys. If they had backed something, then it's probably a good investment, usually. Nagacoin started off as $1, and for every purchase you made from their ICO, you would get 30%. So if you bought $1,000 worth of coins, you'd get 1,300 coins, which was a pretty good deal. The coin ended up going from $1 to about $4.50 several months later after it hit an exchange. So that was 4.5 times your money plus that 30%. So that was actually a pretty good ICO. Now it's actually under $1. So it just goes to show when you buy from an ICO, you might want to watch that price. So anybody that bought into that and sold at 450 made a heap of additional money. So they are partnering up with Money Token. So I'm not really even going to bother reading the rest of the article because I don't really even want to say Roger Ver's name that many times. But here's Money Token. So if you guys want to take a look at this, it's just moneytoken.com. They are in their final round ICO, and you get a 20% bonus. So when you buy on here, you're going to get a 20% bonus. I'm not actually sure how much each individual coin costs, so it wants me to enter my email and sign up and such. So I don't know at the moment. Could look up the white paper probably. But I don't have an interest in this ICO. But I do feel, as most of my crypto is tied up in some altcoins and things like that, and I don't really want to mess with it at the moment. So no, I'm not making any money from this. No, I don't have a referral link for this. But it is an ICO that is backed by Roger Ver and is likely to go up in value once it hits an exchange. So if you want to make some quick money with this ICO, it's probably one to do it with. So first ever institutional cryptocurrency exchange has been launched by LMAX. So LMAX Exchange Group, a London-based exchange company, established the first physical venue for trading cryptocurrencies that will serve institutional traders. So we are furthering the legitimization of the cryptocurrency market by offering institutions a platform in which to acquire, trade, and hold cryptocurrencies with high-quality, deep liquidity. So the new product known as LMAX Digital aims to serve the portion of its clients that was asking for a way to trade cryptocurrencies with a high level of trust and credibility. So now a lot of exchanges actually have a high level of trust and credibility, to be totally honest. I know we've seen exchanges being hacked and things like that, but you know, for the most part, you're pretty good. However, these people are probably trading millions of dollars worth of crypto at a time, and they don't want to risk putting millions of dollars on an exchange, and I don't blame them for that. So this makes a lot of sense. So we are perfectly positioned to address the gap in the market for a robust physical cryptocurrency exchange operating with institutional liquidity. Over 10 trillion of fiat has been traded in our exchanges to date, and we have institutional clients in over 100 countries. The rise of institutional trading and of cryptocurrencies will be a game changer for the industry. We believe our exchange will support the transformation of the crypto market from the fringes to the mainstream. So it's a physical place. So you're going to go in there, you're going to trade cryptocurrencies, and that's, you know, people with a lot of money. That's what they're going to want to do. Now there are other over-the-counter trade options. I know that Kraken does an over-the-counter sort of dark market, if you will, trade option, where you can get a hold of them, say, hey, I got 10 million bones. I would like to buy a whole bunch of Bitcoin. And they're going, okay, we have a bunch of Bitcoin. And then they give it to you. So you're not actually buying it from the exchange and then jacking up the price of Bitcoin because you needed to do a market buy to buy that much Bitcoin. And you bought through the sell wall and everything. So you ended up paying a lot more and getting a lot less of your crypto than you wanted to. So you know, when you're operating on that high of a level, you can have these dramatic effects. And let's say you have $10 million worth of Bitcoin that you want to sell. So you go on GDEX and you hit the market sell button, or even if you tried to do a limit buy, you would create a sell wall that would stay there for weeks. It would take you so long to sell that. And then everybody would avoid your sell wall, and you might not, it might take you a long time to sell it, to be totally honest. And then if you hit market buy, the thing is that you're going to sell it to everybody right now. So there might be 10 people looking to buy at the price that you just sold it, and then 10 people looking to buy at $30 under that price, and then so on and so on and so on until you sell all of your Bitcoin. So you're going to end up selling it for a lot less overall than you would for just $10,000 even, you know, per coin kind of thing. So that's why there are over-the-counter trade options. So what do I think about this? So, you know, it's supposed to change the industry. We already have over-the-counter trading, and this is good so that you can walk in, you know, for rich people to walk in and buy a bunch of crypto or sell a bunch of crypto. That's fine. Thing is that I don't think it's going to change the industry too much, because a lot of the time this is over-the-counter. This isn't really affecting the market. This really isn't raising the price of the market that much. You know, they might end up taking some of the Bitcoin and then selling it slowly here and there and lowering the price. You know, it's hard to say what this is going to do. You know, from experience, let me just show you this. So December 18th is when futures launched. December 18th was when CME, the CMX or CME group futures launched, I think based out of Chicago. And look what happened. December 18th. Oh, man. So it dropped. Now, it does drop every December approximately around Christmas, so that isn't the exact cause of it. But as you can see here, futures after futures. After futures. So it didn't do anything good for the market. There wasn't a price increase. There was never a price increase. Ever since it occurred, it has not been remotely that much. And that's because when Wall Street and these institutional investors get into it, one, they rip the volatility out of the trading because they're so on things that as soon as the price goes down, they're buying. As soon as the price goes up, they're selling. And that's how volatility gets ripped out of Wall Street, because there's so many bots and so many traders on Wall Street with so much money. At any given time, at any whim, they can buy, sell, or do whatever they want with their money because they have so much of it, of course, as long as they're making profit, that as soon as an Apple share goes down 2 pennies, tons of people are buying it, right? And then that's going to raise the price right back to where it was. And then as soon as it goes up 2 pennies, tons of people are selling it. And that's why the stock market moves so slow, is because there's all these bots, all these people on it at any given time watching the market, that as soon as it goes down. Whereas crypto is more volatile because, one, it has a lower market cap, so every dollar that you put into it raises and lowers it much more than the stock market. But two, there's honestly less bots and less people looking at it than Wall Street. I know that's kind of hard to believe, but that's certainly got to be the case. So we're talking institutional bots, you know, looking at Wall Street. So there's a big difference, and so they ripped the volatility out of it. And ever since, it's inarguably not good for Bitcoin and crypto that futures launched, because there was never a price increase. And even if you blame this on the holiday and blame this on the Chinese New Year or this, that, or the other thing, we have yet to see that recovery from institutional investors in crypto. And so it was only a matter of time until whales and institutional investors and, you know, institutions, basically, overall, I guess I don't have another word for it, before it sort of not ruined crypto, but really disrupted crypto and turned it into something a lot different. You know, you were running 3, 4, 5 GPUs in your house, making a Bitcoin a day back in the day. And then it took a long time for whales and overall, like, these rich people that just don't believe in that kind of system to understand, whoa, this is big. Maybe we should get warehouse after warehouse after warehouse of ASIC miners and GPUs because we have all that money to throw around. And then it sort of, you know, disrupts the mining and overall actions of crypto. But I hope you guys enjoyed this video, and I hope you know, I hope my little charts here kind of showed you guys a little bit something that you know, maybe a little just a overall look at how the crypto market dips at about every January. Now this one's a lot different, 2013 to 2014. So this one's a totally different story. But we still see this massive dip. But it took till about February for that actually to occur. But I hope you guys enjoyed it, and I will see you guys next time.